Pioneer Foods reported a 15% increase in full-year headline earnings. That was to 389 cents a share. The company expects South Africa's macroeconomic outlook will remain bearish, and therefore it sees continued pressure on food and beverage categories. Company Chief Executive Phil Roux joins us now as we unpack the numbers. Well, Phil, are you a Ferraier from the Tiger Brands team? I mean, the guys in the Cape are quite sensitive about these things moving from one camp to the other.
Feels a little bit that way, but it was the pinnacle of my career, so the opportunity to become chief executive of the second biggest listed FMCG company in South Africa couldn't pass me by.
How did they convince you? Were you feeling as though Peter McLaurie will be around a bit too long at Tiger?
Indeed. I had a wonderful working relationship and association with him and Tiger Brands. It was really about the opportunity per se. It was the box I had to tick.
And who found you? Yanni Mouton?
No, not at all. They made use of recruitment companies, and they went through diligence in sourcing candidates from all over South Africa and abroad. So it was a robust process. We had to prepare presentations, diagnostics on the company, submit some of those in advance, present on the day. So a lot of rigor went into it by the Human Capital Committee.
What happens in a case like this? Because clearly you've been at Tiger Brands, you know that company inside out, it's your major competitor. You now go to the other side of the fence. Do you have any restrictions ethically, morally or legally in what you can think about?
No, I don't think it governs my thoughts. It certainly governs my actions. Your integrity has to be of the highest level. What you can't divulge, of course, is trade secrets, handing over of formulations, recipes, that type of intellectual capital that belongs to another company. But nothing forbids me from competing effectively and using my 25 years of FMCG industry that I've built up, both with Tiger Brands, Coca-Cola and I&J for that matter.
One thing that Alec mentioned that is constantly seen through your company results today is the word significant change. What exactly does that entail?
It has been pretty frenzied, I must say, over the past 6 months. Having observed Pioneer from the outside, like any good competitor should for many years, I was familiar with the organization. That said, you don't know what you don't know. And having embedded myself into the diagnostics, it's quite clear that there are two challenges at the heart of Pioneer. The growth on a 5-year CAGR basis, top line, has been ahead of its industry peers. Where we've lagged is that our margin is infinitely thinner, which suggests something about costs, mix, product portfolio, the corporate portfolio makeup. And then we have invested significantly through the balance sheet, peaking this year at 1.3 billion. So that has suppressed the return on net assets. So that has largely governed the 5-point strategic plan that I've put forward for the organization that we're working against.
I see that your gearing has gone up from 16% to 22%. That's still very, very low in a normal industrial company. Are you consciously wanting to gear the balance sheet more?
No, I think that's a bit misleading. The 22% includes a portion of RMB debt associated with our BEE schemes, and that'll be repaid in the fullness of time, so that won't go away until the maturity date. There was a 7-year lock-in period. If you back that out, we have a debt equity ratio of 15%.
Which is low.
It's very low, and as we're going into a strong cash generative cycle. If we do as we say, our margins will open up, and I'm stripping all fixed capital investment out of the business, barring investment in asset care in our facilities. So there'll be...
What does that mean, maintenance?
Maintenance, largely. So there will be no fixed capital for the next 3 to 4 years, so the cash that we generate will be quite significant, which we can redeploy.
Because your dividend of 86 cents against headline earnings of 389 cents, it's a huge cover of the dividends. Are you suggesting or telling us that as you widen those margins, the dividend is perhaps going to rise more aggressively than earnings need to?
Perhaps said differently, we want to lower the dividend cover. I think the dividend we paid this year is some 2.7 times cover. We've said to the market, 2.5 times, and get closer to our industry peers, twice times cover. So certainly some of it must go back as we make progress. For the rest, not indifferent to lots of South African companies. We can't rely on South Africa for real growth alone. So we are looking north. We have some assets sprinkled on the rest of the continent, but we'll certainly assert ourselves a bit more there, given, some opportunities.
Which opportunities are you looking at? We know that in Zambia you've got your mega eggs, but
Yes.
where else are you looking at?
So mega eggs will be part of the unbundling process with Quantum, so I don't really factor that into our forward thinking. We have joint ventures in Namibia and Botswana, but those are relatively small. Those are largely milling assets, and we use the same infrastructure to distribute the balance of our goods. So I'm certainly looking north. I was in Nigeria recently with the rest of South Africa. You have good companionship on aeroplanes nowadays. So I'm looking at Nigeria, but we won't make any big bets. I have to put my time, 80% of my time and that of my executive team, into really doing as we're committing to, and that's getting South Africa to fire on all cylinders. So we'll make very selective acquisitions, East Africa, West Africa, and we do have a pipeline of opportunities that we're working on. We won't bet the farm, and use those rather as a platform to expand upon should we find other acquisitions in those countries over time.
Tell us about the unbundling of the chicken side.
Yes. Well, I think starting with the strategic logic, Alec, it didn't take long for me to realize, many, many years ago in Tiger Brands, we unbundled Astral, as you will recall it. It was a very successful unbundling. And my vision for Pioneer is to be a strongly branded organization. You might argue you have brands like Tate Strum and New Laid in the portfolio, but the customer, as opposed to the consumer, is largely the gatekeeper. They decide whether you trade or not. So we have sufficient vagaries and volatility we have to contend with within our grains business. And with the losses and the lack of industry attractiveness that you find akin to the broiler portion, it certainly came up as a non-strategic fit for me. That said, the work that team have done over the past 6 months has been spectacular, rationalizing their assets, curtailing intake. The business has been profitable for the past 3 months, and by freeing it up, we give our shareholders, because we are unbundling to our existing shareholders, the right to make choices in an asset and an industry with its own set of dynamics.
What's the market cap of Quantum likely to be?
Probably around its kind of sales value, I would think.
Roughly?
3.5 billion.
3.5. Okay.
Just on that, will that streamline your business and maybe focus more on your cereals business and maybe the juices?
Definitely. Even with Quantum out, well, you would have seen in the numbers, because we reported in a separate manner this morning, our margin ticks up by 1.5% with it out. That said, I want to increase the segmental contribution of our non-grains entity, so beverages, the snacks and treats, and our Bacomo breakfast cereals business to a far greater contribution over the next 3 years.
Have you moved to the Cape?
I have.
And?
I'm nestled somewhere between Paarl and Franschhoek. My son calls it Paarshoek. Beautiful polo estate called Val de Vie. But it hasn't done much for my sinuses.
Val de Vie, that's where the swimmer is. That's where the wants to go. Rake
Yeah, sure. Definitely.
Well, we look forward to talking to you again, Phil, when you've had another little while under your belt. It looks like an exciting turnaround opportunity. Lots of people talking Pioneer. And I guess with an entrepreneur like Yanni Mutani involved. Just before you go, though, with Zeder in the same family, if you like, doing its expansions into other parts of Africa, specifically in Zambia, are you able to curtail?
Look, I was asked that question this morning, and I guess the logical answer is yes, but there's no need for us to do that right now. Given the cash generative cycle and the current debt equity ratio that we have, we can go solo for the main.